What's up everyone, this is Big Bull here. In this video, I'm hosting a live TA masterclass on two PSS trading models I use every single day to catch big plays on SPY. One is my reversal model, which I made under my PSS pivot structure shift model. And the second one is the continuation model. So in the reversal model, so when the price is topping out, sweeping liquidity and getting ready to dump, in this model, I usually get in right near the top, right after the sweep. Stop loss usually very tight on this. And then my reversal model comes usually from the external range liquidity levels. I will go over multiple examples on this too. Second one is the continuation model that I also use after using my reversal model. Or let's say if I miss the reversal model in the morning, then I look for continuation setups, which I take almost every single day once I snipe the top using my reversal model. And this is exactly what I did today too, live in front of all the members. So let's go over first the reversal model and how it actually works, right? And what are the basics of the reversal model. On SPY, first what you have to do is mark the highs and lows, swing highs, swing lows. It could be hourly swing highs, 30 minutes, 5, 15. It could be any level on higher time frames, right? As long as it's swing highs and there is no highs above it and swing lows right here, and there are no lows right here. So you wanna basically target the external range liquidity highs and external range liquidity lows right here and right here. You're probably gonna see price making these highs right here and goes sideways. And then after it goes sideways, price usually what it's gonna do is it's gonna break above the previous swing highs. It could be external range liquidity, it could be days high, or it could be 15-minute opening range high or 30-minute opening range high. So any high is on intraday time frame, you're gonna mark again. You're not gonna mark last week highs or 2 weeks, a month ago highs, only the fresh levels on hourly 30 minutes, 5 or 15 minutes level. We'll go over the examples too. And once price breaks above that level, at that moment, I'm gonna start looking for reversal setups right away, because whenever price is above swing highs, what you're going to see is most of the time is price breaking above the prior swing highs, and then all the breakout traders are going to come in the market thinking the price is just going to keep going higher and higher to the next level. But if you logically think about it, is the move started from here, from this bottom, right, or right from here, and it's now breaking out here. What are the chances that market is going to pay those late buyers up here? There are very low chances, and the risk to reward is basically nothing for longs up here. So what I always look for is only the short setups when price breaks above the prior swing highs, and then right away I'm going to start to look for a liquidity sweep of that exact same level, which is going to look like something like this. Price goes above swing highs and it closes back under in the same time frame. Again, most of my entries comes in the 1 minute time frame, and I mark my levels on 5, 10, 15, 30 minutes and hourly or daily, whatever. But my entries always goes on the 1 minute time frame. If I'm watching hourly level, then I'm not going to wait for hourly close to hourly sweep. Then again, minimum I'm going to go for the 5 minute or 15-minute liquidity sweep, and then I'm going to go into a smaller time frame on 1 minute or even 2-3 minutes time frame to get my entry model. Because thing is, once you go in a smaller time frame and look for entry model there, you're going to have a very tight stop loss on all of your positions every single time. And this is the only reason most of my risk on option plays are max 20 to 30%, and my targets are usually way big because we are targeting this external range liquidity goes right here down below. So once I get the liquidity sweep of that 5 minute or 1 minute time frame of that external range liquidity sweep, right after this, I'm not going to go short right away. This is a reversal model setup. What I'm going to wait for is price to break below fresh swing lows that price made on the same time frame. So let's say this is the 1 minute time frame I'm trading. So on 1 minute, I want to see price breaking below that recent swing low that it made. It could be, let's say this is higher highs and this is higher lows, this is higher highs and this is higher lows. So I want to see price breaking below this higher lows, confirming that DRS right here. So once it happened, so it's going to confirm that there is a DRS, which is directional shift. So that is a step 2 already. So step 1 is going to be our liquidity sweep. Step 2 is going to be the DRS. And then once the DRS is there, is present, now I know that shorts are taking control. Now the price is going to print this lower lows right here, and price is going to go higher and it's going to make lower highs. Once you make lower, I don't know if it's a lower highs yet. We don't know that. It's just going highs, but we're going to treat it as lower highs because price made a lower lows here. And could be just prices can go straight high. It could be just a trap, and then price moves higher, because this is how price moves in a bullish market. So this is why I added this extra strap, so we can actually confirm that the downtrend is real, and then we're not going to get a fake out even if we get an entry after the third step. So the third step is I want to see price breaking below this lower lows again, which price recently formed, and that break is going to confirm our structure break point, which I call SBP. Once price breaks below this again DRS low, which is this right here, breaking, now it is confirmed to me that sellers are completely in control, and now very high chances, now this is the protected highs, this swing high that it made, the liquidity sweep high, the manipulation candle high is protected highs. So at this point, I'm gonna target this external range liquidity as my key target, and all these internal range liquidities that, as the price is going higher like this. So this internal range liquidity is going to be my first target, and this internal range liquidity is going to be my second, and then this external range liquidity is going to be my ultimate target. And I also added this fourth step here, but this is not necessary. But let's say if prices extended all the way to the downside, let's say on SPP, we just price breaks and just flushed to the downside. At that point, there is the risk to reward is kind of messed up here. You don't want to add a short here and put your stop loss right here, because that is going to be a too big of a stop loss. So what I did in that case is you're going to pull out your fibs, and from highs to lows, you're going to mark it, and from 38, 50 to 61. So usually I go for 50 to 61 high value zone. Price pulls back into the high value zone. That is where I'm going to take my entry, and I'm going to put my stop loss at the manipulation candle high. And then we're going to target all these levels down here, and we're going to catch this massive move with a very tight stop loss right here. So this is how I trade the reversal model. And I'm going to show you now today's example on SPY. Yes, very clean move here on SPY today on 1 minute time frame. Is how you're going to say your price is just chopping in a sideways range, but once you mark your levels, it's going to become very clear. So this exact setup I took today. You see how price made high of the day right here, and it dumped to the new lows, and it made this external range liquidity. So this becomes our external range liquidity highs, and this becomes our external range liquidity lows right here. And once price started pumping higher, price broke above this intraday swing highs, and right after it broke above, in the next candle, if you see price, let me just go back right here, be much easier for you to see. So right in this candle, we got the liquidity sweep, price closed below the swing highs right here again, but this is not the confirmation that I am looking for. So the second step, boom, we got a break right here of that prior candle low. So now that is a confirmed DRS for me. That second step is done. Now in the third one, price goes higher, and then boom, you see in the third right here, liquidity sweep, and boom. So right here we got, you see price change the trend, moved higher, and then boom, right here another lows, breaking below this lows, confirmed that is a structure break point. Now step 3 is confirmed. I put my stop loss at high of the day, and my first target was this internal range liquidity, this one first right here. And my second target was this internal range liquidity, and my ultimate target was this 691.23 level, and I shorted right here, stop loss right above the highs, and we targeted this massive move to the downside. And now let's see how it plays out. See, bulls trying, but first targets got hit, and then boom, massive move, boom, new lows again, and puts went up 80% in just, I would say, 5 or 10 minutes with a very tight stop loss. So this is exactly how I trade my reversal model every single day on SPY. So let me show you how I caught on silver using this exact model yesterday, which went 1600% or not, I think it was 5-minute time frame. Right here, you see price made this swing highs. Price made this swing highs. So I marked these swing highs and I marked these swing lows. So this becomes my external range liquidity on silver. You see, because anything in between, let's say this lows right here, this lows is our internal range liquidity. I was marking again on 5, 10, 15, it's going to be the exact same levels, right? But 5 minutes what I prefer for liquidity sweeps if I'm marking any higher time frame levels. So let's play it. Bulls try to break it, and then spend some time, and then boom, we got the liquidity sweep right here in this candle. So now it showed me in this at this moment that late bulls are trapped. Now, very high chances if it breaks a structure on 5-minute time frame, I'm gonna enter. And then once I enter into a trade after this liquidity sweep on silver of 120 and 66 level, that late bulls are obviously trapped. If you see prices, it keeps on pumping off this lows or even this lows. If you want it to be a bull, your entry should be right here, or your entry should be here, targeting these external highs right here. You just cannot enter above the swing highs expecting price to keep pumping, because breakout traders always get trapped. They always gonna trap breakout traders. Either it's their upside or it's a downside. You never wanna be getting into a trade thinking it's a breakout. You always wanna be getting into a trade thinking it's a reversal. That way your risk is just going to be so minimal and your reward is always going to be so big. And silver is a pretty good example of that trade that I took. So we got that liquidity sweep on 5-minute. Now let's play it. We got that. Okay, now let's go to 1-minute time frame to see how it actually played out. You see, we got the sweep, candles closing below, and then we got the DRS confirmation in this candle where price is just making lower lows and lower highs. Price made the lower highs, and then boom, right here. Got the DRS on 5-minute time frame, but on 1 minute that's SVP already, because I was trading the higher time frame. So I was waiting for higher time frame confirmation to get into a trade. And then once price made this DRS low right here, that's a one leg. Price went higher, lower highs, the exact same thing that I told you, right? You don't want to be shorting here because it could just be another trap and then price can just pump back higher too, right? We got the structure change in this example right here. But what happened next is we got that internal range liquidity sweep, trapped it, and then boom, start making new highs. So you never want to short on the step 2. You always want to wait for step 3, which is a structure break point. And right here, price broke below this low, confirmed that now this highs that it made right here, this swing highs, now it's a protected high on the 5-minute time frame. That means shorts are in, price is there, a structure breakpoint is there. So now we can go ahead and place our short trade. And then right, I think 650, 655, I alerted to the members on 5-minute time frame that silver is now gonna go red. On the day, I'm targeting this external range liquidity lows right here. So we held on to it, got like slight out of the money puts of 105. SLV. Now, if we go on SLV, you're going to see the exact same setup. You see on S, price made highs and boom, lows, another highs, SVP confirmed. And then on this pullback right here, again, this pullback was the high value zone pullback. If you see, I marked my from highs to lows, price pulled back into the high value zone. This is exactly where I alerted my entry. And now let's see how it played out. Stop loss at the highs, and I expected it to go red on the day and fill this gap completely. And let's play it. Trying to push higher, but boom. Another rejection of that high value zone and a very clean move downside. And if you see, the only reason that I did not sell this entire position and I held on to it is because price kept on making these lower lows and lower highs. So there was no reason for me to sell. Massive dump, and puts went up like 600% in just, I would say, like an hour. And then that was a historic move in silver, and caught it. In yesterday's case, price never actually broke above a swing highs that it made, like lower highs. So price made a lower highs here. This was a lower high. But you see, it every single time price tried to pump back higher, it was just dumped back down. And this recent swing highs or this lower highs became this protected highs, and then it just kept on dumping, and price hit all of our targets on silver to the dot. This was my main target where I took most of my positions off. Let's play it. Let it move higher, and boom, again, move. And this is where I sold most of my positions, and we caught this massive 12% move on silver, and puts went up 600%. So this is exactly how I use my reversal model, combining 5-minute time frame and entry model on the 1-minute time frame. So that's how I trade my reversal models. And now let's go over my continuation setups that I take right after I'm done taking my reversal models. Continuation is going to be, let's say if you missed a reversal setup and then you having that FOMO that how you're gonna get into a trade and stuff, but you don't have any idea how you can catch the move, but you having that FOMO. So the continuation setup comes into play at that point, where you can actually have a model instead of having a FOMO, and then you can actually go into a 1 minute time frame to trade the continuation setups using internal range liquidity sweeps or the liquidity pockets on 5 minute or 1 minute time frame. And I'm going to show you exactly how to do it. So let's say this is the reversal model that we got. Price went higher and closed below, and then we banked on this whole move to the downside. So now comes the continuation, where most of my round two comes in. Our main goal is to enter on the lower highs. It's going to be a little bit more complicated than a reversal model because you are waiting for a little bit more confirmations to in your continuation setups rather than the reversal setup, but trust me, it's worth it. So if you see on, let's say you're trading this on 5 minutes, and then price is making these lower highs right here. And then we know that there are a lot of open sell orders are sitting in these zones right here, right? Let me mark it red so you can see it better. A lot of open sell orders. I call it liquidity pockets. That means the shorts are strong enough in this zone that they printed a new lower lows right here. Open sell orders sitting in this zone. This is a protected high zone. If as long as shorts are protecting this zone, price is going to keep dumping to the next internal range liquidity or the external range liquidity. You're going to mark all these levels on 5 minute or 1 minute time frame. You're going to mark these internal range liquidity levels, these lower highs levels right here. And then our goal is to get an entry once price comes back into this zone and then starts rejecting, or price comes back into this zone and sweeps above this internal range liquidity, but fail to close above and then closed back below. And after that, we're going to look for exact same setup that we look for on the reversal setup, which is entry model on 1 minute, DRS, SBP, and then boom, we get our entry and we target these internal range liquidity lows or external range liquidity lows right here. So let me show you a quick example how it works. This was a good example. It's the exact model that I traded today. I was already up nice on the day. I had 2 or 3 banger trades. I don't want to enter off the liquidity sweep, so I'm just chilling. But I thought it's going to be a chop too. But when I saw price breaking this prior swing lows right here, confirming that DRSs happened already, and it's making new lows again, lower lows and lower highs, kept on making this lower lows and lower highs. At that point, I thought it's a very high chance again that price is going to this internal range liquidity lows right here and to this equal lows right here that price made yesterday. You're going to mark your levels on 1 minute. You're going to mark your internal range liquidity levels, which is going to be this swing highs and which is this swing highs, this swing high. So we have these 3 levels. So that means I'm going to wait for price to sweep any of these levels. It could be any level, right? Price can even go up to this level here too. So your goal is to mark all these lower highs and then wait for price to sweep that one particular level and then get into our trade using our PSS model. Step 2 and step 3 comes on later. So now I was trading all this live and then we got this boom. You see that massive candle. 5 minute made this prior swing highs at 692.93. Price swept that level on 5 minute and on 1 minute. It swept not one but 2 levels. Once it swept it and then boom, candle closed below. That was my sign that the liquidity sweep has happened. Now I'm going to wait for structure change. Boom, right here. On 1 minute, price is breaking below the lows and then breaking below the lows here. And then we got that lower highs and lower lows again. When I got that lower lows in this candle, that is my confirmation that now this becomes the protected highs right here. So now the continuation model kicks in right away, breaks the lows. I alerted my short entry to the team on the next candle pullback. You see in the next candle, price wicked it right on that wick as price was going higher. I knew that price is in a downtrend now after a sweep, and there is a liquidity sitting right here at the base low, and that is going to be my target. I alerted my entry right here in this candle highs, and my stop loss gave them this candle highs, which was 692.80, and I targeted low of the day and some more here because I knew there's a big range and price is just not going to reverse off this. It's just going to shoot past of this level and then it's going to reverse most likely off that equal lows right here. So this is what exactly price did. We got our entry on around 2 on SPY put using that continuation model. And then, we got some chop. Everyone got filled in this chop, and then massive move again to the downside. And our puts went up another, I think, 70 to 80. No, I think that was like a bagger later on. So yeah, but I sold most of my position on this drop right here. And then I was just holding my runners at that point. Now, if you see, now I'm going to pause it here. And if you see, now I'm going to go into this 5-minute time frame. I took this exact setup on my futures account, but I did not alert this one because we were already done. Now, if I go in a 5-minute time frame, you see price formed this liquidity pocket. Price broke below this lows right here. And now this becomes our strong short zone. If price is below this swing lows right here, which is 692.25, that means shorts are in control. And I'm going to look for short entries in this zone on confirmation. And by confirmation, I mean liquidity sweep on a smaller time frame. And then we add a step 2 and step 3 of our PSS model. So now let's go into the 1-minute time frame and see how that worked out. Price just kept on rejecting the level. And you see what happened right here. This level that I marked, this was a 5-minute high. Remember what I told you guys earlier? Is price is gonna go to this liquidity level. Your job is to look for a trade in that liquidity pocket, or it's gonna sweep that liquidity pocket high and then it's gonna dump. And this is exactly what it did. Price went into the liquidity pocket and swept that 5-minute highs, which was the internal range liquidity, boom, closed below this swing lows right here. That confirmed a directional shift. And then in the next candle on 1 minute, price broke below again this lows here, confirming lower lows and lower highs, confirming a structure break point. I took a trade in NASDAQ, stopped at this candle highs, and then targeting this lows right here and some more. Now let's play it. You see price now just kept on making lower lows and lower highs, lower lows and lower highs, and then boom. Right, see price tried to go higher, another sweep, and then just kept on going lower and caught this massive shot on NASDAQ. Almost like 100-point shot I caught on NASDAQ. So this is exactly how I trade my reversal models and my continuation models using my PSS model. So if you guys still have any questions on reversal models or continuation models, please do let me know in the chat or in the comments, and then I will answer every single one of you. So all right, guys. So with that, I'm gonna go and enjoy my weekend. Hope you guys like this today's session.